Michael Burry, made famous by Michael Lewis in his book The Big Short and played by Christian Bale, of course, in the movie, put out a fun-filled tweet that I think we need to dissect a little bit. I've got it up here on the screen. He says, yeah, inflation peaked, but it's not the last peak of this cycle. He says we will go lower and maybe even negative in the second half, and the U.S. will be in a recession by any definition. He doesn't give a date there, but sometime in the future, the U.S. will be in a recession. I guess it's implied that it's the second half. The Fed is going to have to cut, and the government's going to have to stimulate with some fiscal, I guess, helicopter drops. Let's get to Justina Lee right now, joining us to talk about this and markets in general. Justina, it's really interesting that Michael Burry comes out and says the Fed's going to have to cut because we're going to go into such a deep recession in 2023. Does that jive with consensus?
Yeah, that's a really big call there. But I think one part of the tweet that's really hitting at some of the big themes this year is the call for a recession. Now, if you look at all those Wall Street outlooks that they put out, I mean, that word does come up a lot. And it's one reason why a lot of strategists are expecting at least a better year for bonds, if not stocks. But I think the more controversial part of that tweet is the call for a rate cut. And now that is currently priced in the derivatives market, but we have seen Fed officials trying to push against that narrative. I mean, talking a lot about how they will need to see a persistent slowdown in inflation before they even, think about stopping their monetary tightening campaign.
Michael Burry, who famously predicted the 2008 financial crisis, is at it again, having just tweeted out a terrifying one-word warning to investors to sell. After this, in classic Michael Burry fashion, he deleted his account completely and went into ghost mode protocol once again. Naturally, this caused investors and the financial media to panic, and the burning question on everyone's mind is, what does he mean? How serious can he be? Do you think he's kidding? Unfortunately, Burry's warning tweet was not a joke, and anyone who has been following his cryptic tweets for any length of time knows exactly what he was referring to. Thinks the Federal Reserve's decision to only raise interest rates by 0.25 basis points was a mistake, and that the stock market, cryptocurrency markets, and real estate markets have a lot more pain in store for us in 2023. Welcome back to Market Empire. Before we go into the video, please subscribe to the channel. In this video, Burry predicts future disaster for the markets.
My number one concern is there's been a complete, utter, total abdication of personal responsibility throughout our entire society. I don't think that anyone anywhere is taking blame themselves for what they did to contribute to the crisis. And I think that, again, it gets back to that blame game. I think it's the most damaging thing we can do as a country, is to blame a narrow set and not look within ourselves for what each of us did or didn't do to basic wrong that led to this mess. Go ahead.
You're saying from the average mortgage broker all the way up to the Federal Reserve?
From the borrower through the average mortgage broker all the way up to the Federal Reserve, through Congress, the president, several presidents. I think this has been coming for a while, and there's been a lessening of the credit standards over a period of time that's ultimately led to the kind of blow-off top that we had.
Looking back at his tweets from 2022, in which he makes a clear-cut prediction for 2023 and how he thinks markets are going to play out, we can see that Michael Burry is most likely not joking this time around, despite his earlier joke about being 6 feet tall. This, according to Burry's analysis, is how 2023 will unfold for financial markets. What strategy will pull us out of this real recession? What forces would pull us so? There are none. So, we are really looking at an extended multi-year recession. Who is predicting this? There are none. Michael Burry tweeted. Now that we know Burry isn't joking around, we can get down to business and discuss the elephant in the room, inflation, about which Burry has very strong opinions about how it will affect markets in 2023. Michael Burry predicted in 2021 that inflation would cause a severe squeeze on the economy in 2022, and he was right on the money. Burry tweeted at the time that the United States government was inviting inflation by printing trillions of dollars and reopening the government to increase demand, which in turn would cause employee and supply chain costs to rise. Inflation in 2022 was much higher than expected, prompting the Federal Reserve to tighten monetary policy and raise interest rates at an unprecedented clip, which subsequently wrecked asset prices and stock markets around the world in 2023. In Michael Burry's opinion, the suffering is far from over. Burry thinks we'll see a huge spike in inflation, like the ones in 1929 and the 1940s predicted for 2023, so he thinks the markets haven't bottomed out yet. However, inflation appears to be leveling off, and the Fed has been dropping hints that it will soon reverse course. Inflation peaked harder than expected, as we discussed above, forcing the Fed to keep raising interest rates despite Burry's predictions that it would decline. Burry tweets that ridiculously high valuations and loss-making businesses must be eliminated before markets can reach rock bottom. Given that we've established that Burry is pessimistic about the stock market's recovery in 2023 and that he expects interest rates and the Fed's balance sheet to tighten even further, the question becomes how Burry plans to position his own portfolio to ride out the storm and make the most of a bad situation. In a tweet, Burry compared the current investment climate to one he saw in 2000. Providing a glimpse into his own investment strategy. Value was about to take off for years despite more crash on the way. According to his most recent 13F filing, Burry is currently invested in some rather unremarkable companies, lending credence to his prediction that they will outperform the market in 2023. An investor's holdings are disclosed in a document called a Form 13F, which must be filed with the SEC on a quarterly basis. It was revealed that the majority of Burry's holdings are in companies providing essential services, such as correctional facilities and telecommunications providers. Previously, Burry's portfolio was heavily weighted toward non-critical service providers like Meta and Cigna, but now, 2/3 of the total portfolio consists of these real asset companies. The substantial change in Burry's portfolio can be attributed to his expectation that the value of non-essential goods and services will continue to fall in 2023, while the value of value companies and essential service companies that support the basic functioning of society will increase or, at the very least, maintain their value. Companies in the technology sector have been hit particularly hard in 2023, and widespread layoffs have already begun as a result of a shift in consumer spending habits that has led to less money being spent on non-essential goods and services. There have been layoffs affecting the hundreds of thousands, but some services will always be necessary for society to function. Burry has positioned his portfolio into companies involved in areas such as energy infrastructure, social services, and incarceration. Finally, the gloom and doom that Burry predicted for the year 2023 is here. But he has laid out the plan for how to invest during downturns and where to put your money. In 2023, investors should prioritize maximizing their income over the next 12 to 24 months so that they have enough cash on hand to take advantage of lower prices regardless of the assets they choose to invest in, even if the market continues to decline. Anyway, fellas, I hoped you liked hearing about Michael Burry today. Leave a comment with your ideas below, and we appreciate you tuning in to Market Empire. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to the channel.